With the price of oil plummeting, is it at last safe to circle back to the cruise lines now that the fuel costs are coming way down? This group has been a total house of pain lately as investors worry about overcapacity in the Caribbean and exposure to China, not just fuel. But maybe Wall Street is just being too darn pessimistic. Consider Norwegian Cruise Line Holdings, NCLH, which reported yet another fantastic quarter this very morning. Company delivered a 6-cent earnings beat off a 221 basis with higher than expected sales up 12.5% year over year. Even better, Norwegian saw strong organic pricing growth across all of its core markets, so those worries about too much capacity may be misplaced. Passengers carried up 11%. Bookings great. Net yield, which measures how much a cruise company can make off its passengers, up 4%. In short, the company's firing on all cylinders, which is why on a very tough day for a lot of stocks, the stock rallied 2.6%. So now that oil's coming down, now that the bookings are up, could this thing have more upside? Let's take a close look at Frank Del Rio. He's the president and CEO of Norwegian Cruise Line Holdings. Learn more about the quarter and where the company's headed. Mr. Del Rio, welcome back to Mad Money.
Jim, how are you today? Good to be with you.
Well, I got to tell you, Frank, I'm good because one of the things that happened is that you took me on Bliss on that beautiful ship, and that actually was meaningful for your quarter, wasn't it?
It was. Look, the industry continues to do fantastic. Our company, in particular, is outperforming, hitting on all four cylinders, as you mentioned a moment ago. And the future even looks brighter. We said that our bookings are ahead, both in load and in price for 2019 and even 2020 at this early stage. So all those doubters about overcapacity and the late business cycle, they just don't understand the cruise industry. We're resilient. We perform terrific in both good times and bad times. And I think sooner or later, the fundamentals of performance will overcome all the pessimism and all the wrong assumptions that are being made out there.
I'm glad you bring that up because I hear this talk about late cycle. I've been in the business for 40 years. It's so stupid. It has nothing to do with late cycle. There's secular growers and there are companies that do poorly when the economy turns down. I don't know what people need to see in terms of secular growth from your company, but the numbers that you put out today indicated accelerating growth. How is that possible? If things are turning down, that you could have accelerating growth.
I agree with you. Look, I simply don't believe that the investor community at large understand the fundamentals of the cruise industry. Our ships go full every single time. The question is at what price? And we've shown year after year organic growth in that 3+% level, 4% for us this year, that defies what the naysayers have to say. And then onboard revenue is through the roof, Jim. So we have two data points. Right. We've got a data point based on what customers who might have booked 6-8 months ago and are cruising today are saying about their economy and their confidence. And that's onboard revenue. And onboard revenue is at the highest levels ever. Then there's a second data point.
Well, you should mention free air. You should mention free air, how brilliant that was.
Yeah. And then there's a second data point of people who are booking a cruise today that they're going to take 6, 8, more than a year down the road. And so it's really great to see that our past guest, the travel agency community is behind the travel business, behind the cruise industry in particular. And that's why we do a whole lot better than the other sectors of the broader hospitality space, whether it be hotels, gaming, the airlines. There's just no stopping the cruise industry.
All right, well, so compare it to 2014 in terms of where you are now versus then, because that's a good compare, right? 2014 was decent economy.
Wow. Where can I start? We've delevered from 5+ to the low 3s. The balance sheet is in great shape. We have a more diversified portfolio. Back in 2014, Norwegian was a one-brand company. Today, it has 3 brands, the leading brands in the luxury space, the leading brand in the upper premium space, and, of course, Norwegian Cruise Line. We've added 5 ships since 2014. We'll turn the year 65% booked. Can you imagine a company that has the kind of visibility that we will have? We will have sold 65% of the following year's inventory by year end this year. In 2014, that number was around 30%. So there's just no comparison how far this company has come in the last 3 or 4 years. And there's even more good news to come in 2019 and 2020. So we're extremely excited about the next few years ahead.
All right, last question.
Remember, eight ships on order. So we're going to keep growing organically.
I want to put to rest this idea of too much capacity. Just tell us what happened with Alaska. A lot of capacity, and how was pricing?
Yeah, so we grew pricing over 25% in 2018 on the heels of 15% capacity growth. That just goes against the grain of what all the pundits expect to happen. And we think we're going to be able to do a very good Alaska program this coming year. When we add Norwegian Joy, they're redeploying from China. We'll add 30% capacity, but we'll have the best hardware without question in the Alaska market. And so we're very confident that we can again outperform in the important summer Alaska season.
I totally agree with you. You're really the only travel group that is, I think, truly secular in growth and just great numbers. I want to thank I want to thank Frank Del Rio. He's president and CEO of Norwegian Cruise Lines. Remember, we had the pleasure of being on Bliss. What a great situation. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.